He's the chief executive of one of the world's most efficient gold miners. Sean Boyd of Agnico Eagle joins us here at the BMO Metals and Mining Conference. Sean, good to have you on the show.
Great to be here. Great to be here.
So I was watching an interview, I think you did at the end of 2015, where you noted that you might be producing 30% more gold in 5 years' time. Now, I know you've had some delays at some mines in northern Canada. Has that projection stayed, or are you sticking to that?
We're sticking to that because they're projects we own already, and a lot of that growth in production comes from mines already in production. But the biggest swing factor is Nunavut, and that's an emerging area, huge mineral potential, you can get business done, and that's going to be a meaningful part of our company for a number of years in the future.
Now, you were involved in one of the most publicized takeovers in the mining industry of Cisco. Are you still eyeing deals of that magnitude today?
Not really that magnitude. Our expertise has been in the smaller end, and we've today meaningful parts of our business are things that we've bought in the last 10 years and explored and added ounces. So we're focused on the junior space, the single asset development stories, getting access to those early and turning them into meaningful parts of our business. So that's the big focus from an M&A standpoint.
Okay, so is that your main focus for 2016? What other goals do you have this year?
Well, we've done something unique. The last few years, we've made a major commitment to exploration. We doubled our budget last year. We're maintaining that level this year. The biggest part of our story, besides the future production growth, is how we're adding value through exploration. And we're going to augment that with hopefully selected smaller M&A as we move forward.
Let's talk gold price now. What do you make of the current price environment?
Oh, it's turned. And we were sort of looking over the last 3 years, and we were in a market where the paper market was dominant, and people were not focused on what was really happening in the physical markets, where China was emerging as a major power, not only in gold production, but in demand. Indian demand's been strong. Central banks are buying again. Mine supply is turning over. We need investors to come back. When you look at the economic conditions of no growth with still significant debt in the system, a lot of smart money is now turning to gold as a place that they feel they need to be. And we're seeing that with the investor interest here, and we think the next 2-3 years are going to be extremely positive for gold.
So something really significant happening in the gold space. You mentioned China. We've seen that they upped their reserves this year. They've become more transparent. There's even talk that they may go to a gold-backed currency. What do you make of China as a player here?
Well, you have to look at the history, and it was 12 or 13 years ago where they made an announcement they were going to establish a gold exchange in Shanghai. They're long-term thinkers, and all we're seeing year after year is them expanding the market, developing the market, markets becoming more mature, to the point where they're the single largest source of demand for good reason. They realize that gold's an important part of their reserves, an important part of them moving their currency into the mainstream and competing with the US dollar. So that's not going to end anytime soon. So that's going to be a big driver here, and that's something that we need to watch.
And in terms of forecasts, do you foresee gold keeping up with this rally? We've had a great run since the start of the year. How do you see it playing out for the rest of 2016?
Well, there's some healthy skepticism. I think it's run fast in a short period of time, but it can still be up $200 or $300 in the next year or two, because we're in a situation where there's no growth, and we've taken away that trade which was short gold, and it was short gold because of the expectations about the Fed continually increasing interest rates. That's gone away now. They may raise a couple of times, but that's taken the momentum away from that trade, and I think we're moving in the up direction for the next little while.
Sean, thank you so much. Best of luck in 2016.
Thank you.
And thanks for watching our coverage here from the BMO Metals and Mining Conference.